Thank you for joining us at xm.com for today's market comment by Rafi Boyadjian. I'm Maria Bashirtadis. Federal Reserve officials have hit the speaking circuit for the first time since Chair Powell's dovish appearance in his post-FOMC meeting press briefing last week, in what looked to be an attempt to steer markets away from aggressive rate cut expectations. New York and Atlanta Fed presidents John Williams and Raphael Bostic were out in force on Friday, pushing back against bets of an early rate cut. But Williams' comments in particular came across as more deliberate and were likely endorsed by Powell. After sparking a market euphoria on Wednesday, sending out his top lieutenant could have been Powell's way of conducting some damage control. The problem is, having already added fuel to the fire, it might require a lot more to contain this irrational exuberance by investors. Treasury yields briefly jumped higher on Friday on the back of Williams' remarks, boosting the US dollar, while shares on Wall Street dipped. But the moves were relatively modest, and it didn't take long for them to be reversed. This is likely an indication that investors are confident that inflation will soon reach 2% and stay there, and therefore continue to price in almost 150 basis points of rate cuts in 2024. U.S. stock futures are marginally higher on Monday after modest gains for the Dow Jones and Nasdaq on Friday, and a flat close for the S&P 500. In Europe, stocks have had a mixed start to the last full trading week of the year before Christmas, as ECB policymakers have joined their Fed peers in pushing back against early rate cuts. Hawkish remarks from the ECB's Nagel and Muller earlier today have lifted the euro, which is recouping some of Friday's steep losses. The yen bucked the trend, however, softening to around 142.40 to the dollar during European trading. After a lot of speculation about a surprise rate hike by the Bank of Japan in December, most bets now seem to be settling towards an April liftoff, putting some downside pressure on the yen. Governor Ueda has repeatedly hinted that the outcome of next year's spring wage negotiations will be crucial to any decision on exiting negative rates, so no change in policy is the likely outcome of the BOJ announcement early on Tuesday. Thanks for watching today's market comment here at xm.com.